So this is the new business math, and this is test number 3. So let's get going. Go ahead and do the test, and then you can check it however you want to do it. So don't just take my answers. Just make sure you do it first to see if you got it right, or look it up in your book even before to see. The balance sheet is okay. Let's do number 1. A balance sheet is used to record net sales, gross profit, expenses, and net profit. No, a balance sheet is just balances out your liabilities and capital and income. That's the first thing we learned. So this here with the net sales, gross profit, and expenses is called the income statement. It's like a report card. It has those 6 things on it. It's like your report card, your income statement. So this answer is false. It's not a balance sheet, it's an income statement. Number 2. The income from sales minus the cost of goods. So if you have income from sales, that's what you have taken in, you sold that, and you take off the cost of good, this yields the net sales. No, it's going to yield the gross. So not anything to do, there's not nets as the net sales. The income sales, which actually would be the net sales, minus the cost of goods is going to be your gross. Okay, so this would be false too. It's not net sales. Number 3, an increase in assets or recorded under an increase in assets is recorded under the credit column. Okay, if you said do the asset ASED, if it's increase, it's going to be in the debit, right? Because you increase the assets, it's going to be in the debit. So it's not in the credit, it's going to be in the debit. So this is false. So whenever you have an increase in assets, it's always going to be a debit. So on to number 4. An increase in income's going to be opposite from, because it's on the other team, I should say. It's under this click. So we got income. So an increase in income is recorded under the credit column. Yes, it is, because here's increase in income, and it's going to be credit. So true. Number 5, the net sales equals income from the sales minus the returns and allowance. What is that? Net sales is you take your income, and then you have to subtract all the returns to get your net sales. So this is true. If you take basically, in order to have net sales, you got to make sure that you have the right sales. If people return things, of course, you need to subtract those things that were returned. Number 6. So net profit equals net sales minus the cost of goods sold. So net profit is how much you profit, equals net sales minus the cost of goods sold. No, it'd be gross. You're going to take the gross sales, not the net sales, because the net sales is going to be that, but basically you have to take the gross sales because you have to subtract, the cost of goods. So basically this is not net sales, it's going to be gross. So net profit equals, it's not net profit. Here's net sales. Net sales minus the goods sold is going to be the gross, not net profit. False. Okay, hope you're understanding this. If the Jefferson had a cash deficit for the month, their cash payments must have been larger than their cash receipts. Yeah. So if they had a deficit, that means they're in the negative. That means their payments, they got too many payments and not enough receipts for cash. So so they had a cash deficit for the month. Their cash payments must have been larger than their cash receipts. True. On to number 8. An income statement is used to compare the total assets with the total capital and liability. So that's false. An income statement is a report card. It's not. This is just number 1 question up here. You had the balance sheet. This is the balance sheet. The balance sheet is to compare. Balance is comparing total assets with total capital and liability. Assets, capital, and liability. That's your balance sheet. So An income statement is your report card, so you have to have all 6 things on your income statement. And so you need more than just capital and liability and assets. That's your balance sheet. So this is false. Number 9, an increase in liability is recorded under the debit column of the general journal. So, okay, an increase in liability, let's do that. Increase of liability, here's liability. Liability increases, so it's going to be a credit. So it's in the credit column. So it says debit, so this is false. Just CLIC, and then the liability is going to go up. Right here goes up, which means it's going to be a credit. Number 10, a debit entry is a dollar amount that is recorded in the left column. So is debit in the left column? Yep, it's on the left. It's always DC. Debit's always on the left and credit's always on the right. DC, like Washington, D.C. So this is true. Okay, let's go on to number 11. So whether your dollar amount is debit or credit entry is determined by which accounting category is used and whether the category is increased or decreased. Yeah, that's what we're doing. We look at which category it is and then to find out whether that category is increased or decreased to find out and writing that whether it's debit or credit. True. This is what we're doing. Number 12, the general journal is used to help organize entries into categories according to their account name. No, not according to their account name. A general journal just has all the different, one debit, one credit, what you're doing every day, just your journal. And that journal is put into a ledger. So your general journal is not the ledger. So we did that. General journal is where you put all your, your debits and such, and then you have to organize them into this big ledger, this almost like a library of stuff, and it'll have all these different ledgers together. So this is false. It's not a general journal. It's account. It would be account ledger is used to help organize. Okay, general journals don't really organize necessarily. They're just for that time. So now we have, and you have this on your test here. You have a t-shirt rack income statement for quarter ended July 1st. You have the income from sales, and then you have you're figuring this whole thing out. This is going to be your for your income statement. We're going to figure out, and it's let's put it here. It looks like this. Right? I don't know if you can get it all there. So you have this income statement. It's all on your thing, and then we have number 13, number 14, and then on to number 15 and 16. So there's 3 problems. So this first one here is number 13. So let's look up here, number 13. So we have income from sales. This is how much money we took in, and we have returns. So what's our net sales? So we're going to add this and this. So let's go down here. Net sales. So I added 189,316, and then I subtracted the returns, and I got 186,310. Make sure you show your work there. It's a subtraction. So this is going to be my answer that I'd write up here in number 13, which I didn't write it in here, but you can just put the answer. So the next one is the gross profit. So the gross profit, I said gross sales before, but this is gross profit, which is the correct. So to find the gross profit, what we're going to do now is we know, we know the cost of goods the cost of goods that we paid for our goods. So we're going to have to subtract that from number 13, which is our net sales. And so let's do that. The gross profit here is basically 186,310. We got that for our net sales in number 13. And so we subtract our cost of goods sold, those things we sold, so we can find our gross profit, how much we really made, because we had brought in all that money, but we paid for, like if we paid for cost of our goods. We bought some goods and then we sold them on retail. So here we go. Go ahead and make sure you write this all in and do your borrowing here. Show your borrowing and everything. So I had to borrow here 10 minus 2. And then I had to borrow here 10 minus 7 is 3. And as we see here, this turned to 2. Borrowed here. Each one you have to borrow. So this is 12 minus 3 is 9. And then I had to borrow again, 7. 15 minus 8 is, they give you a problem with a lot of borrowing, is 7. And then we have 17 minus 9 is 8. So show all that work. So that's number 14. So let's go on to number 15. Let's look up here. Number 15 is here at the bottom. So we have that gross profit up here, but now we have to subtract a whole bunch of expenses too to find out really what we made. This is our report card. So we had salaries and wages, we had rent, we had utilities, we had advertising. So we have to add these all up and see what our expenses are. So number 15 would be our total operating expenses, just adding these up. So this is where I added them up. So you can add these all up. 6 and 1, 5, add them all up, down, carry your numbers. And I got $57,094. So these are our totally operating expenses. So now that we have the total operating expenses, we want to know what our grade is, our net profit. Well, what our profit would be 16. So we're going to take our gross profit, which was number 14, the answer for our gross profit, and we're going to subtract our expenses so they can really see what our what we netted, what our net profit is. So net profit would be gross profit minus expenses. So this is our gross profit. We didn't take off our expenses yet, and we subtract our expenses, and we got $30,844. This would be our net profit. So this down here we could write in here a number 16 and write net profit. This would be our grade because we subtracted everything we're supposed to subtract, right? So that's up to number 16. Okay, now we have number 17. So, I don't know if I'm getting it all on here, the page. I guess I am. So, use the following information to complete the general journal. Be careful if cash payments are received, if cash. So whenever you have cash, payouts and receivables, make sure you put them as cash, is what they're saying. So, okay. So, Import Automotive made several transactions during the week of October 8th through 12th. Okay, and I just put these out. You have it in a paragraph form, but go ahead and write these out. And you could write them or somehow so that you have them, because always have to write them out when you have I always have to write them out like 1, 2, 3, what things happened in that paragraph. So in that transaction. And so I have number 1, they fixed Ralph Waldo's car. They fixed, and he paid them $387 in cash on October 8th. That's one thing that happened. The next thing that happened on October 9th, the next day, Import Auto paid cash for tools. So they paid $239 cash for tools. The next day on October 10th, they paid cash for mortgage payment. They had to pay their mortgage payment, so they had to write a check to their mortgage payment, which was $716. That's accounts payable, so I wrote that. The Delvos, these people, picked up a repaired car on October, I think it says picked up a repaired car on October 11th, and they paid us Automotive, which is us, $157.30 in cash. Then October 12th, Friday, the employee checks totaled that we had to pay our employees. We paid it out of our cash, $453.26 to pay our employees. So this is what we had. So, and then down here it has, 101 is cash, that's asset. 120 is equipment, which is an asset too. Accounts payable is 201, which is liability. And sales income was 401 for income. And the salaries are going to be 501. You need to put these because this is how you're going to put it on your put it on your general journal. So let's look. So I don't know, I don't have it. So basically I had import automatic general journal. This is page 12, it says. And I put in this corner, asset up in this corner, so and clicked so I can, so I can know if the category be debit or credit. So let's go the first part here. So let's go up here so you can see. On October 8th, the cash, you do the first one, cash from the Ralph's cash. So you're going to take in the cash, merchandise fee for the car repair. I put cash and I put that. And then I put in the numbers. Well, first of all, we're going to put down, if it's a cash debit, means basically the cash is coming into our asset. So it's an asset, which is 101, and the asset is $387. And that asset would be a debit, because if we did an increase in our assets, it's going to be a debit. So we put that as debit. It also is going to be a credit because it's going to come under income, because we have income. And if we do click up here, click up in this corner, click, so if you put click here, increase in income is going to be a credit. So we have debit and we have a credit here written this way. And of course, if up here it says if it's cash, it's going to be 101 asset. So we put 101 for the cash. For the income, we put 401, which up here it says 401 sales income. So we have sales income, 401, and these two. Okay, let's go on to the next thing. On October 9th, what happened on October 9th? Up here it says October 9th, import auto paid cash for tools. So basically you're paid cash for tools. So, and does it say pay cash? Paid cash for, no, wait. This is on October 11th. That's October 10th. Oh, here's the cash up here, I'm sorry. October 9th, I'm sorry. So it's October 9th. Tools, cash, they paid tools, $239.58. So you're paying cash. That means if you're paying cash, you had to pay for the tools, so your assets is going to go down. So purchase tools and cash would be 101, and we put it in the credit because the assets went down. Do the asset level. And then the tools now are also, they're both the assets. Our tools are assets because we got new tools. So the tools are assets, so we're going to put down the tools as an asset. We're going to put 239 for tools. So you shouldn't have this cash written here, so you can take that off. So that's going to be our debit, because we have asset as a debit and we have asset as a credit. And the tools up here, look up here, equipment up here is 120, so we're going to put down 120 for the equipment, and we'll put 101 for the cash. We'll put that number there, so that's where it looks. October 10th. October 10th, you have a mortgage payment. So that's going to be, it's going to be a liability. So, and the mortgage payment is in cash. So your cash is going to go down. So this is an asset. Your cash is going down, 101. If the asset goes down, it is going to be a credit, not a liability, or not a debit. So you put $716. And then the mortgage, you could put these in either order. So then the mortgage payment is a liability. The liability goes up. It's going, if the mortgage payment, let's see, he paid the mortgage payment, right? So the liabilities are going to go down, and so it's going to be a debit. So 716. See? Of course, each one you're going to do the asset click on these, because otherwise it's hard to find out. Two things you need to know: if an increase or decrease, and what category it is. Is it going to be debit or credit? So on October 11th, we have October 11th up here. We have the mechanic fees income and car repairs in cash. So we put mechanic fees income. So we have income. So the income is going to put us at 401 would be income. So that would be income would be 157.30 because if the income goes up, it goes in the credit. Now the cash asset is 101 and the asset is going to be 157. So there's going to be debit. That if the asset goes up, you got more cash in your assets, it's going to be 157.30. That would be a debit. So this would be 101 would be our cash assets, and 401 would be our income. So these two correspond here. So the next one, these are not that hard, but gotta do them. So October 12th, what we have on October 12th, salary and wages we're paying for. So we put salary and wages. We're going to put salary and wages, which are going to be expenses, which are going to be in the 500s. Up here, it says 501 salary and wages right up here. So we're going to put expenses. So salary and wages, the expenses goes, if the expenses goes up, if the expenses are going up, the cash, basically, you can have ACED, right? It's up here, right up here, ACED. So if the expenses goes up, then it's going to be a debit. So we're going to put down 453.26. It's going to be a debit on our salary and wage under expenses. And so then we're paying it for cash, so our assets are going to go down because we're going to decrease our cash because we had to pay out for wages, and that's 101. That's going to be our assets, and so that's going to be a credit because it goes down. So it's going to be a credit. 453.26. Okay, that was 17 through 26. So let's go on to the next. We've got another type of ledger. Record the cash transactions from the previous journal in 27, journal ledger 27 through 31. So, okay. So we're going to record the cash transactions. So you're going to have, this is, I have it written here. So you have the dates account over on this side, 101, account 101, you see? So you have this is general journal. So on October, this is the general journal is recording. This is our ledger. Remember the ledger? So we're going to have debits on this side and credits on this side. So on October 8th of 20 here, we had, and look, you can look back, explanation. We had the cash, and it's from General Journal, page 12. So look over there. It was from your General Journal page. That's our reference. And we had a debit of $387.12. So we do that. On October 11th, here we go, October 9th, we have basically have the credit here. And that's on post reference General Journal, page 12. And you have the credit here. So, and here you have, see, all of these, each and every one of these, there's 5 of them. They're all assets because we're in account 101. So these all have to be assets, right? So if you went back to this page here, which ones are in 101? So we have this one is 101, that's an asset. This one's 101, that's an asset. This one's 101, that's an asset. This one's 101, that's an asset. 1, 2, 3, 4, 5. So we have five to record on this one. They're all in 101. They're all going to be on 101 of your ledger. See, just the one. The other ones you have to do, you don't worry about because you put on a different ledger, right? So that's what we're doing. We're going to put those on there. So on your ledger, you're going to have on October 8th, cash was a debit of $387.12. That means your cash went up because you sold something, and so you have a debit. So then on October 9th, the next one, you purchased some tools. And so if you purchased tools, your asset, basically in purchasing those tools, your asset of cash, because you purchased them, went down. So it's not expenses because we're talking about cash. We're going to talk about cash. Cash went down. So on GJ12, they're all GJ12 because that's what we're dealing with. Cash went down here. So GJ12, $239.58 was on credit because you bought tools. We're talking, and your cash went down because you bought tools. Now on October 11th, your cash went up, so you put down GJ12 on the cash and you had $157.30 that went up. So if it's an asset and it goes up, it's going to be a debit. So on October 10th, put here, October 10th, make sure each one of them you put General Journal 12 right here for the account. You have your mortgage payment. Well, you had to pay cash out of your assets there, so it's going to go down. So if the mortgage payment went down, it would have been a credit, $716. All these over here is going to be credit, and these anytime an asset goes, goes up, it's going to be a debit. If it goes down, it's going to be a credit. So we have mortgage, $716. Now we have the salaries cash that you paid out of the cash here for salaries. And so since you paid out and the assets went down because it took away your cash, you're going to have $453.26. You want to write that in your credit. So you're going to have 3 of those are credits and 2 of those are debits, and it has to be written this out as you see. And they're all referenced to General Journal. So this is the ledger. This is how to do a ledger, right? So I don't have the test thing. You can see the ledger on there and you can write these in. Okay, now we've got the easy part. So we're going to go on to number 32. Number 32 is addition. Write it all here. Make sure you know that these are zeros, so we don't. So 4, 8, 9, 2 is 11, plus 7 is 18, carry the 1. Make sure you do all your carrying and stuff because I want to see that you know how to add these. So do that. Number 33, you're going to subtract. So you have 11,100. They want to know you can borrow. So you're going to, can't borrow there, borrow from here. Make this a 9, make this a 10, 10 minus 6, 9 minus 5. And so then you're going to have to borrow here, make this a 10, this 10, 7, 3, and then you have 10. So this is the answer. You can do this on your paper, okay? It's pretty easy. So I'm not saying it's that easy because if you get one thing wrong, then you're a problem. This is number 34. So you have 0.005 times 9.2. So just do the math first. So I said, basically you have 5. Okay, you can turn this around or however, but you're going to have the 5 times 2 is going to be 10. Carry the 1. You have 45. 9 times 5 is 45. 46. So you put 460. Well, here's the decimal point, and you have to move it over 1, 2, 3, 4 places. So you go 1, 2, 3, and then you're going to have to add a 0. You just want to make sure you know how to add zeros there. Number 35 is a long multiplication problem because there's 3 different areas. So as you can see, I put make sure you do it like this, and when you're carrying, make sure this carrying is for the first one. This is the second one, and this is the third one. So give yourself some room there. They don't give you very much room, so you could do it on the bottom or something, or somewhere where they're in the scratch, or if you want to first. But anyway, this is how to do it. 8 times 2, 16, carry the 1. 8 times 3 is 8 times 3 is 24, 25, carry the 5, on and on and on. So you do this. You know how to do this long multiplication, and then you have these. Because as you go, you're going to have your multiplication. But these are 2 factors, the multiplicand and onto here, and you have this is the partial product. This is partial product. This is going to be your answer. So, okay, let's go on to 36. Getting a little bit difficult here, but really not. So we have 478 goes into 12,428, right? Okay. So first of all, I do make sure you show your little problems up here. So you have 478. First I look at 4 goes into 12 3 times. So it may be 3, but probably not because it's way over 4. So it probably 2. So I put 478 times 2 is 956. It looks like 956 is going to be our answer. So I put 2 up here, right up here too, because it's going to be 956 subtracted. You got 2868, bring the 8 down. So now 2868, 4 goes into 28. You know, when you say how many times, well, we know that 4 goes into 28, 9 times, but you know it's going to be too much. So I'm not 9 times, 7 times. 4 times 7 is 28, so it's not going to be 7. So let's try 6. So I went and tried 6 here. 478 times 6 is 2868, perfectly. So the answer is going to be 26. Now, remember, for each one of these problems, look to see if they're a dollar sign or not. So far we had no dollar signs, but if you don't put the dollar sign, they can count it wrong. So let's go into 37. So here we have 37, the same way. Only thing on this one, you have a decimal point, so you have to move this decimal point over, and then you have to move this decimal point over. The 8 is right here, and put it up here. So that's important, to put the decimal point in first. Now do the same way you did before. Just leave that decimal point there. So 972, you think of 972 goes into 6,600. Well, you think of 9 goes into, when I think of 97, going into how many times? Here's 972. This goes into 66. Well, so let's see. 9 goes into 66. Well, you can see 9 goes into 66 would be let's put up here 6 times. So put your 6 times. So 972 times 6 is 832. Go ahead and put that in there. So I put down 832. See if you can read this. So I put down, so it's actually not 830, it's 5832. I'm sorry, I didn't get that number, 5832. So if you times this times 6, you get 5832, and then you subtract it. This is kind of a hard one, and then because there's a lot of little numbers, and so you subtract it, and you get 8164 right there. And you subtract it, and you think 97, 9 goes into like 77, well, times 8. So I tried 8, I said 12 times 8 is 9796. So that's wrong. That, or 7776. That's not a 9, it's a 7. So that works. So I put 8 up here. Let's see if I can put this here so you can see it. So I put 8 up here, and then I put 7776, and then I subtract, and I got 3888. So now 9 goes into 38. Well, 5 is 35, but if you try that, it doesn't work. So 972 times 4 is exactly 3888. Ooh, so there we got the exact number, 6.84. Okay, but you need to put in these where you're doing your work, your chicken scratch over whatever, this, and this, to try to figure this out. So that was 37. Number 38 is the easy one. We have 9 plus 8 plus 6 plus 4. You have to go just 9 plus 8 is 17. And then you go plus 6 would be 23, plus 4 is 27. So they stuck a pretty easy one in there. So 39 here is another multiplication. This one has a dollar sign, so make sure you put the dollar sign. 315 times 21, 5 times 5, 1, 3, 10, carry the 1. This one's the easy one. It's 66.15 with the dollar sign. So number 40, do this. As you're looking through this, you have 103. So just think of 100, how much 100 goes. So how much, first of all, you have to move that decimal point over. 1, 2, 1, 2, and I move the decimal point over right there. So now that you move the decimal point over, that's ways to start. You think of, okay, 103 goes into 500. 100 goes into 500 how many times? So 103 times 5, which I did over here, is 515. So 515, you subtract 520, you got 61, bring the 8 down. 61, 103 times 6 is 618. So it'd be 618. So it'd be 5.6. So this is pretty easy to do because you're going to kind of round this to 100 as you're thinking how to do this. So this is a pretty easy one, 40. So on to number 41. So this is easy. Round off $8.753 to the nearest cent. Do you know how to round this off? Basically, you're looking to the nearest cent would be 75 cents, right? So 8.7, what? You round off that 3, you got, what did I say? Oh, you round that 3 off. You're just going to take that 3 off and you'll get 8.75. Just take that. If it's above 5, you're going to go to the next number. So since it's below, you're going to take it off. It's going to round to that. That was an easy one. Multiply 8.94 by 28.8 and round to the nearest cent. So you're going to have to do your multiplication problem here. So you have 18.94 to 28.8. So now you're going to see you're going to have 1, 2, 3, 4. You're going to have three places, so you're going to round it. But let's go ahead. 8 times, this is, you're going to have to, see, I didn't have enough room, but you need to have up there each one. So, but 8 times 4 is 32, carry the 3. 9 times 8 is 72, 75, carry the 7. 8 times 8 is 64, plus 7 is 71, carry the 7. 8 times 1 plus 7 is 15, so 15152. So the next one would be 8 times 4 is 32, carry the 3. 872 plus 3 is 75, carry the 7. 8 plus 8 times 8 is 64 plus 7. 64 plus 7 is going to be 71, carry the 7. 8, 15. So basically this is pretty easy because your times it by 8, times by 8 again. So we have 15152, 15152, and then this one is going to be 4 times 2 is 8, and then 2 times 9 is 18, carry the 1. 8 times 8 is 64, 60, what did I say? No, I'm sorry, 2 times 8. That's what you can get offline. 2 times 8 is 16, 17, and then 17 is just carrying the 1 is 3. So anyway, and then add that. And then after you add that, you have 3 places, so you have to round to the nearest cent. So over here, you round to the nearest cent would be, this is a 2 at the end, right? So that's going to just take that 2 off to round it. So it's going to be $445.47 rounded to the nearest cent. Just make sure you do this whole problem. You should know how to do these. Number 43. Identify the owner's equity in as liability, capital, or income. So identify owner's equity. Anytime you have owner's equity, I told you that over and over, you're going to have capital. So it's going to be capital. That's an easy one. Identify factory overhead as an asset, cost of goods sold, or expense. If you have factory overhead, that's what they're making your stuff, your goods with. So it's going to be cost of goods sold because the factory is making it, and you're going to have to pay for it, you know, as they make their goods for you. So cost of goods sold is the answer. So now these have to do with Blake Distributors. So Blake Distributors had a beginning inventory for June of 100,000. They purchased 25,000 in goods during the month. Then the income from sales, you need to, I always write this out so it's not just in a paragraph. The income from sales was 200,000 with $10,000 returns. Ending inventory was 30,000. Operating expenses were 50,000. This is all you have, all that, right? So the first question in 45 says, what was the amount of goods available for sale? Okay, the the amount of goods available for sale. So what was our goods available? It says right here, 100,000. Had a buying inventory. That was our inventory, basically 100,000. And then you had $100,000 worth of goods for sale, but you purchased 25,000 more. So 100,000 plus 25,000 equals 125,000. So put your work here. It's going to be 125,000. Basically, you're just going to go down. You had 100,000. You had 100,000 of goods, and then you purchased more. So now you have $125,000 to sale, goods for sale. The next one, what was the cost of goods sold? So you have to subtract your ending inventory because you didn't sell them. So now you have 125,000 minus 30,000, so you get 95,000, and that's going to be your cost of goods sold. Your actual cost of goods sold is 9,000 or 95,000 because you have to take off your stuff you had left that you didn't sell. So, and that's 95,000. So what was the net sales? Okay, the net sales, the income from sales was $200,000, right? Up here it's $200,000, but you have to subtract returns. So all I did was there. What was the net sales? Is that you take the sales. What was the sale? $200,000 in sales, but you had returns of 10,000. Subtract that, you get 190,000 of net sales. That's your net. But now you want to know the gross. We're going to have to take the gross profit on 48. What was the gross profit? So you're going to have to take the net sales minus the cost of goods sold, because you have to get rid of this to see what you net. So you had 190,000 minus, and what was our cost of goods sold? 95,000, or 95,000. So you got 190,000 minus 95,000, which equals, lo and behold, 95,000. Okay, and so here, so the net sales minus the cost of goods sold, and the cost of goods sold we figured up here. So is our gross profit, which is 95,000. Make sure you put all your dollar signs here. Number 49, was there an excess or a deficit? So we look here, we definitely had, definitely have an excess, a pretty large excess. So we have an excess because we have $95,000 we made. That's a pretty big one. So we have an excess. Now it says, what was the net profit or loss? Then we take our expenses. And what were our expenses? Our expenses were $50,000, because we look here and say, is $50,000 of expenses? If we take that off 95, do we have an excess? So when I said here, what is the excess? You have to take 95,000 minus 50,000. That's your expenses, and you'll get 45,000. So you can do 50 before, because basically you're taking, this is our gross profit, but we have to take off our expenses. And so we made 45,000. I said 95, but you made 45,000, and that would be our excess. 45,000 profit would be our excess. So that's it for the test.